Welcome to another audit walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over Audit Area 4. This is Section E6, and this is a remembering and understanding topic. Identify the factors an auditor should consider when reporting on the audit of financial statements prepared in accordance with the cash basis, tax basis, regulatory basis, contractual basis, or other basis of accounting. And we're going to be doing that the SuperfastCPA way, which is diving straight into the questions to learn the material. Now, if you don't know much about our strategies, make sure you go to SuperfastCPA.com and sign up for our free 1-hour webinar training. Again, it's free, it is only 1 hour long, and we will teach you the key ingredients to passing the CPA exam in that 1 hour so that you don't waste months or even years of your time failing exams. And after you watch that, you're going to want to learn more, so make sure you also check out becoming a Superfast CPA Pro member. Pro members get access to the Pro course where Nate explains in depth exactly what you're supposed to be doing every day to pass the exams, and they also get access to the full 10-question versions of these 5-question YouTube videos. So again, in today's video, we're only going over 5 questions, but Superfast CPA Pro members get access to the full 10-question version when we post it in the member forum so that they can get a little bit more help and a little bit more understanding. So make sure you check out becoming a Pro member and make sure you check out the webinar. Now with that, let's dive straight into the questions. All right, here we are at question 1. Let's just dive straight in. Which of the following is not considered a special purpose framework? So let's go into it. Option A, cash basis. Option B, tax basis. Option C, International Financial Reporting Standards or IFRS. Or D, regulatory basis. Now, to be honest, if you paid attention to the blueprint topic, then you probably already know the correct answer. But if not, that's okay. We're going to look at the answer together to start learning about special purpose frameworks. So let's dive into this. Okay, here we are at the answer. C, International Financial Reporting Standards, or IFRS. That is not a special purpose framework. So let's dive into this. Special purpose frameworks, or SPFs, also known as Other Comprehensive Basis of Accounting, or OCBOA, you've probably heard that before, are financial reporting frameworks other than GAAP that are used for specific purposes or by specific users. The typical SPFs include cash basis, tax basis, regulatory basis, contractual basis, and there is other basis. There might be some other ones that aren't mentioned specifically here, but the big ones are cash basis, tax basis, regulatory basis, and contractual basis. IFRS is not a special purpose framework, even though you might kind of think it is. It is a general purpose framework like US GAAP, intended for a broad range of users and therefore does not fall under OCBOA. So because IFRS, even though it's not something we typically use very much in the United States, unless you're dealing with a lot of international stuff, it's something that a lot of companies and countries outside of the US use. So it's still a broad range of users that use it. So it's not a special purpose framework. It's not OCBOA. Now with that, let's go to the next question. All right, here we are at question 2. When issuing an audit report on financial statements prepared using a special purpose framework, such as the cash basis or tax basis of accounting, which of the following is the auditor required to do? So we learned a little bit about what a special purpose framework is in the first question, and now we're learning about what the auditor has to do when it comes to special purpose frameworks. So let's go into option A. Express an opinion on whether the special purpose framework is appropriate for the entity's needs. Option B. State that the financial statements are presented fairly in accordance with GAAP. Option C. Omit any reference to the special purpose framework to avoid confusion. Or option D. State that the financial statements are presented fairly in accordance with the special purpose framework used. Okay, so again, what is the auditor supposed to do when it comes to auditing special purpose frameworks or auditing financials that have a special purpose framework? If you know, that's great. If not, that's okay. Again, we are using these questions to learn, so let's dive into the explanation. All right, here we are at the answer. D, state that the financial statements are presented fairly in accordance with the special purpose framework used. So that is something that auditors are supposed to do when it comes to this kind of an audit. When reporting on OCBOA, again, that's basically special purpose frameworks, financial statements, the auditor is required to first state that the financial statements are fairly presented in accordance with the applicable special purpose framework, and that would again be like cash basis, tax basis. They also are required to include an emphasis of matter paragraph that refers to the note describing the basis of accounting and states that the framework is a comprehensive basis of accounting other than GAAP. So they basically just have to have an emphasis of matter paragraph pointing out that they are not using a GAAP framework. They also have to clearly state that the audit was conducted in accordance with GAS, not GAAP, and again, those are the generally accepted auditing standards. And they also have to avoid expressing an opinion on the appropriateness of the framework. That is management's responsibility. So just to make sure that's clear, management is the one who's supposed to decide on the appropriateness of a framework, not the auditor. The report should not reference GAAP as the reporting framework, and it must clearly identify the alternative basis used. So again, essentially it comes down to they have to just basically say this was a special purpose framework, and they're seeing if it was fairly presented. That's really the basis of it. Now with that, let's go to the next question. All right, here we are at question 3, and this is something I always like to point out when it is an option, and in these videos you might think it's not super useful, but I think it is an extremely useful habit to be in for test day. and that is reading the last sentence of the question first. That will frequently give you context for what the question is about, so that as you're reading through the rest of the question, you can already be thinking about what the answer is or kind of figuring it out as you go. Again, in these videos, sometimes it might seem silly because sometimes the questions are only like 2 sentences long. But again, this is a very good habit to be in, so that's why I want you to get into the habit of it, even in situations where maybe you don't necessarily need it. It will be so useful in the situations where you do need it and you have that habit. So let's dive into this. Which of the following best describes how the auditor should report on these financial statements? Let's go up to the top. An auditor is engaged to audit financial statements prepared using the cash basis of accounting. So again, what best describes how they should report on these financial statements? And we've learned a little bit about this so far, in general, but now we're focusing on cash basis. So let's see if we can apply what we learned. Option A, the auditor should disclaim an opinion because the cash basis does not conform to GAAP. Option B, the auditor should express an opinion that the financial statements are presented fairly in accordance with the cash basis of accounting. Option C, the auditor should issue an adverse opinion due to the departure from GAAP. Or option D, the auditor should modify the report to express limited assurance due to the use of a non-traditional framework. So again, based on what we've learned so far, you probably could figure out the correct answer. And if not, that's okay. But if you want to give it a try, pause the video and come back when you're ready. All right, here we are at the answer B. The auditor should express an opinion that the financial statements are presented fairly in accordance with the cash basis of accounting. All right, so we just barely went over that in question 2, but you were basically applying it here in question 3. We're going to go over this. It's going to be very similar to question 2, but again, this is the kind of thing that you need to get hit home over and over again so that you know very easily what the answer is. So let's go through this. The cash basis of accounting is one of the commonly accepted special purpose frameworks. Again, that would be under OCBOA. When financial statements are prepared on the cash basis, the auditor conducts the audit in accordance with GAAP, just as with GAAP-based audits. They issue an unmodified opinion if the financials are fairly presented in accordance with the cash basis. They do not express an opinion on the appropriateness of the framework. And again, that is management's responsibility, so they're not going to say you shouldn't be using cash basis. That's not up to them. And they also include an emphasis of matter paragraph identifying the use of the cash basis and referring to the related footnote. Again, very similar to question 2, just applying it to cash basis, and you can see that it's basically the same. A disclaimer, and that was option A, an adverse opinion, that was option C, or a limited assurance report, and that was option D, would be incorrect as none of these reflect how OCBOA audits are properly reported. So again, these are kind of the same idea with cash basis as we were just talking about in general. Now let's go to the next question. All right, here we are at question 4, and again, reading the last sentence first, even when it might not seem like it's super necessary. Which of the following should the auditor include in the audit report? Let's go up to the top. An auditor is engaged to audit a company's financial statements prepared using the income tax basis of accounting. So let's go through this. Option A, a statement that the financial statements are fairly presented in accordance with the income tax basis of accounting. Option B, a disclaimer of opinion due to the use of a non-GAAP framework. Option C, a requirement that the report conform to PCAOB standards. Or option D, a conclusion that the income tax basis is appropriate for general purpose financial reporting. So again, what is the correct answer? Again, I think this should be pretty easy based on what we've learned so far, but pause the video if you want to and think about this, and when you're ready to come back, we'll look at the answer together. All right, here we are. The answer is A, a statement that the financial statements are fairly presented in accordance with the income tax basis of accounting. Very similar to what we just talked about with cash basis and with OCBOA in general. In fact, we're pretty much just applying it over again here because this is something that you need to see over and over again. So let's go through this. The tax basis of accounting is one of the recognized special purpose frameworks. When auditing financials prepared on the tax basis, the auditor, again, conducts the audit under GAAP, not PCAOB standards unless it is a public company. They state that the financial statements are fairly presented in accordance with the income tax basis of accounting. They include an emphasis of matter paragraph identifying the framework and referring to the note that describes it. And they do not express an opinion on whether it's appropriate. Again, that would be left to management. Same thing over and over again. And I just wanted to make sure that that is very clear. Now, a disclaimer, that was option B, PCAOB requirement. It's not necessarily always going to be a requirement, and that was option C. Or a general use conclusion, that was option D, would all be incorrect under AUC standards for OCBOA reports. So again, we see there pretty similar idea with all the special purpose frameworks so far. Now let's go to the next question. All right, here we are at question 5. Which of the following titles would be inappropriate for financial statements prepared using the cash basis of accounting? Okay, so we're talking about titles now because this is relevant. Let's go through the options. And again, which one of these would be inappropriate? Which one should they not use? Option A, statement of revenues collected and expenses paid. Option B, balance sheet on cash basis. Option C, income statement. Or option D, statement of assets and liabilities arising from cash transactions. So which one should they not use if they're on cash basis? You can probably figure this out just by thinking through it, but if you want, pause the video and come back when you're ready. All right, here we are. The answer is C, income statement. So that one would be not appropriate for a cash basis financials. Let's go through this. When financial statements are prepared using a special purpose framework such as the cash basis, the titles must clearly reflect the non-GAAP nature of the presentation. Acceptable titles for cash basis financials would include statement of revenues collected and expenses paid. That would probably be the income statement, statement of assets and liabilities arising from cash transactions. Again, that's probably the balance sheet. And then the balance sheet on cash basis. So you could even have just income statement on cash basis. You just have to make sure it's very clear that it is on cash basis, and you can't just say balance sheet or just say income statement. Using a GAAP specific title like, again, income statement is misleading and implies GAAP compliance. If the financial statements use inappropriate titles, and this is the interesting thing, the auditor may be required to issue a qualified opinion due to the presentation not being in accordance with the applicable financial reporting framework. So it's that important that the titles are non-GAAP titles, because the auditor might have to issue a qualified opinion, and we talked about those in the previous video, if they don't have the correct title. So that is important. Now with that, we learned a lot about special purpose frameworks in these 5 questions. Before we do anything else, let's do one more part of the SuperFast CPA process called pillar topics. Now, the idea behind pillar topics is as you're going through the questions to learn the material, you will notice the things that keep popping up. You've seen 2 or 3 or 4 questions trying to teach you about the titles for special purpose frameworks or whatever the case is. Again, you notice these things as you're going through the questions, and you take a moment, you write them out in your own words as the pillar topics, the key points of what you learned. And as you're doing this each day, you are building your own personal repository of what you learned from the questions in your own words so that you are ready for the exam when it comes to test day. So let's go ahead and take a look at the pillar topics for this video. All right, here we are at the pillar topics. Let's just dive straight in. First off, special purpose frameworks include the cash basis, tax basis, regulatory basis, contractual basis, and other basis. Other basis is just kind of like it's the one that everything else fits into. These frameworks are alternatives to GAAP and are used for specific reporting needs. It's not something that is just super common. It's all over the place. I mean, of course, they're fairly common, but they are for a very specific purpose. Audits of special purpose framework financials are conducted in accordance with GAS, not GAAP. The auditor expresses an opinion on fair presentation in accordance with the framework, not on the appropriateness of the framework itself. The auditor's report must include an emphasis of matter paragraph referring to the note that describes the special purpose framework. So they have to basically point out this is a special purpose framework, and they have to point that note out to people. The report should state that the financials are presented on a comprehensive basis other than GAAP. And then the next one, financial statements prepared under a special purpose framework must use appropriate non-GAAP titles, and we just barely talked about that. Inappropriate titles may result in a qualified opinion due to improper presentation. And then finally, when the financials are intended for limited use, such as with a regulatory or contractual basis, the report must include an other matter paragraph restricting its use. And we didn't talk about that super explicitly, so I wanted to throw that in here at the end with the pillar topics because it's a very small thing, but I wanted to make sure you understood it. This ensures the report is not misused by unintended users. So just one extra thing that you needed to pay attention to there. Again, if it's regulatory or contractual basis, they have to have a paragraph saying that it is restricted for specific use. Now, we learned a lot in this video through the 5 questions and the pillar topics, and that is the end of the YouTube version of this video. And honestly, this is the last audit video that I'm going to be making for a good while. I just barely, with this video, we made it to the end of the blueprint for audit. I, of course, didn't cover every single topic in the audit blueprint, but I've covered the majority of them, especially the most important ones from what I thought. So this is the last audit video for a while. I'm going to take a little break, and then I will come back and probably do bar next at some point in the near future. But if you liked this and you liked all these audit videos that I just made over the past few months, make sure you check out becoming a SuperfastCPA Pro member. Remember, Pro members get access to the SuperfastCPA Pro member forum where they can get access to the full 10-question versions of these videos so that they can get a little bit more help and a little bit more understanding. And the easiest way to become a SuperfastCPA Pro member is actually by first going to SuperfastCPA.com and signing up for our free 1-hour webinar. Watch that hour webinar. It will teach you a lot. It will give you the key ingredients to passing the CPA exam. And then you will have a much better path to learning about and becoming a SuperfastCPA Pro member so that you can get access to all the great stuff that Pro members get access to. Now, I hope this video was helpful. If you did like it, make sure to like it and leave a comment. I hope all of these audit videos have been helpful, and I will see you in the next section.